Good morning. It's Friday. You weren't aware. How's everybody doing today? Hey, Lita. Morning. Good morning. So markets were starting to roll over a little bit this morning, and then unemployment news, whatever it was, coming out there. And I guess markets want to go up here, and it just seems that they don't care about anything. So I would say that is the sign of a bull market. The trend here, we have to say, is the kind of a trend that you see in a bull market. And as we said in some of the other updates, of course, and during the day, the weekly timeframes are in downtrends and the monthlies broke down. And the depth of this retracement here, historically, just based on falls that happen like this, caught me a little by surprise, admittedly. And so now, as this has gone up, looking at the spiders here, it seems like a no-brainer that the 200 MA would be the focal point. A lot of times they do become like a magnet because that's where the majorities are focused on, that moving average, since it's so widely followed. However, the prior high is up in this area here. So we'll see if it can get here or it gets beyond. But this would be a 100% retracement of that prior decline. And while this is obviously a much stiffer area of price resistance, guys, give me 1 second here. And that would likely be ultimately where it could stop if it's going to get there. As I said, the depth of retracement here, and it's got nothing to do with looking at things like Fibonacci numbers. It's, what we talked about yesterday when we went over certain concepts here in the room, was that it's just common sense that, a retracement that could retrace everything of a prior decline is a positive event. So as it gets up in this area, clearly there's going to be sellers here. And, that same type of thinking applies to all time frames. So just as it was here, where there would be sellers, we expect sellers up there. Now, how much might it decline from that point? Well, we really don't know. We would look at this as being minor support. This is being major support, assuming it just keeps climbing like that. And a break of this low would be a break of this upward move on the daily time frame. And that would be in alignment with the weekly time frame. Now we'll just have to see how that all plays out. But at this point in time, we now have our market internals lining up that says a reversal, some type of bearish pattern at this point in time, historically will follow through. Tony's saying on the way up, few red bars, bullish until it does not. Clearly, Tony. So, here at this point in time, just going back a little in the history of what happened here at the low, where the internals got to an extreme, and we got this wide range bar. So when this reversal formed, my expectation was a retest, which is the historical, pattern that sets up. It didn't happen this time. It gapped up and it took off, no red bars all the way up. And that, and unless you're just, willing, and it's okay to do that, go with some big stop. And, you look at a chart like this and say, okay, that's fine. But, looking at the S&Ps and saying, okay, I'm going to give this an 8 to 10 point stop. That's big. But that's what you would have to do because there's no reference point. And then buyers just keep coming in. And then, of course, we had this consolidation that doesn't break through. And now prices are pushing up with the expectation of testing the 200 or possibly beyond. Now, what's kind of interesting with this market is that as it started to turn and with all the, let's just say BS going on in Washington and whatever's happening in the world, during this decline, everything was about an inverted yield curve potentially happening, China trade wars, so on and so forth. And now no one cares about it, about any of that. Everything's going to be okay. Well, let's see what happens. And you should take note of that, make a mental note, write it in your journal, the kind of things that are happening and the news that comes out at the time, because that kind of gives you that experience within the markets. And I keep notes like that. You guys see that in the room here, the notes that I put on my charts about different things. But in any event, at this point in time, I showed you the internals are telling us historically, danger, Will Robinson. Things are looking wonderful. Those will begin to throw caution to the wind, believing that this market will continue to go up. And, as we come into this area here, and we are in that area. Yesterday, it was almost a close at 0.80, where this is inverted to be above, which is actually below the number, but I've inverted the scale. So historically, we know that we're getting closer to a turning point, a meaningful turning point, whereas here it certainly looked like it could roll over, but we didn't have that signal that we do have at this time. So we always respect that because, I've been following this for decades, and it's extremely, extremely accurate. It doesn't mean it's going to happen today, but never ignore it. And so Qs, same thing. We see a lot of similar things in the market, but what's kind of interesting right now in this market, Intel got shellacked. Market didn't care. Now Amazon's getting shellacked. And essentially, and this is the 800-pound gorilla. And, the market, it was down a little earlier. The Qs are down here a little bit, but essentially it's like, all right, big deal. Who cares? We don't care that, the biggest stock in the NASDAQ, or maybe the whole market is getting shellacked here today. And, the Fed backed off on, its view on needing to raise interest rates. One of their comments was because of a view of somewhat slowing growth, which kind of made me think, slowing growth, good for stocks. Market goes up. Well, that's, the psychology right now. Market internally after good odds of reversal in near. Absolute, Tony, when those internals reach an extreme, unless they go from a bearish extreme to a bullish one, or vice versa, in the matter of several days, it always means that you're close to a reversal is near. Always, always. And I've followed this, I'm telling you, for decades. Back tested it. Yes. And after that kind of a run, especially. So what I'm saying is, say, over here, it had gotten to a bullish extreme, a lot of, bearish plays going on. And at this point, it had reached a bearish extreme where there's a lot of call buying, or even especially breadth got to an extreme. That would actually be a positive to see that happen. But that didn't. And now we're up here where it's reached an extreme. And historically, whether it's next week or 5 days or whatever it is, when those reach extremes, this market is going to correct. And it could correct sideways if it's really that bullish. It doesn't have to go down, but it's telling us that risk is becoming extremely high on the long side. So am I bullish for today? Well, not really. I'm looking at, most of what I'll be looking at today, probably from a day trading point of view. Like yesterday with the PayPal, market went up. I saw PayPal gap down. It couldn't rally when the market did. And as the market got that 5-minute reversal bar, the initial one, I said, okay, it's time to short PayPal, relative weakness. It worked out quite nicely. So even though my view initially here is that, the markets can go up and test that 200 MA, the intradays are looking fine. I know that the risk is there, so I'd rather play intraday. I'm not going to initiate new swing long setups at this point in time because of those internals. But I mean, Dan went over a whole bunch of stocks with you guys yesterday in the room, and it was pretty surprising to see these wide range bars breaking out of bottoming patterns. Now, the takeaway from that is, look, you've got these internals saying one thing. It doesn't mean it's going to turn on a dime, but we have a concept of playing catch up. And those stocks is where the money flows into, and they play catch up, meaning the dogs that didn't move up with the market, money starts looking for what is the crap out there that might play catch up. And the stuff he was looking at yesterday, while had a great day, wide range bars up, essentially we could call it the crap in the market because it was going down and basing. It couldn't go up, but they could go up for several days and then peter out. So, internals are one piece of information, and, you need to understand, how to put that together. And, like I wrote in the Monday letter, was that, look, this is very possible to happen. What's happening right now. And I said, if you're going to trade this, you better know what you're doing, and you better have the discipline to exit at the appropriate time, because it's probably going to be the last run from this move off of the low. So everything's about experience. You could do anything in the market, meaning if you have money management, you have experience, you have your trading plan, and that's part of why you're here, to learn how to do all that, of course. Dow holding up nicely. It's just hugging right there at the 200. Is that prior high up there? And maybe it's got the void, exactly what I posted in the letter. Here's the void here that it could run up into. So we'll see what happens. And the other part of our scenario or plan is that, well, yes, that's possible. What's our first reference point of support? Right? Everything is step-by-step systematic price analysis. Prior day's low. So while this has a void to go up, what if it closes below the prior day's low? Is that going to change your opinion and bias? It is for me, especially with the internals as they are. So we'll see. Right? So you always have to have two scenarios, two possibilities. Otherwise, you get stuck on, one. And when it doesn't happen, well, that's where, people can't take stops and they incur big losses, right? Bonds going up, starting to turn back up, which means yields are going to go down. So what's going to happen as this market begins to correct with the internals as they are? When you turn on CNBC, they're going to bring the gurus back on that are going to be warning you about the inverted yield curve, because that is what is going to come back into people's mindsets, that when it pulled back, oh, that's easing now. As this is going up and yields are coming down, that yield curve is going to start tightening again. Right. Oil hanging up here. It pegged this high up here at I think it was $55 yesterday or thereabouts, and it came back in, but it didn't close below a prior day's low. So far, it's just consolidating, and maybe oil can go up, and we'll see if the oil stocks are going to follow. Gold continues to hold up here, and looks like it can go higher. And with that being said, I'll give Dan his time to review the trades and what's moving here this morning.
All right. Good morning, everyone. And we don't have much inventory. Hey, Cliff, LaDon. Hey, LaDon, I have a gift for you, so stick around for a few minutes. I made it just for you. IBV, this is our little trouble call spread. Greg sent out a little, screenshot saying, let's, give it more room because it's a horrible spot to stop out. Tandem, covered call, doing fine. We rolled it yesterday for the 4th or 5th time. BMY, we rolled into a covered put yesterday to improve our cost basis. WWE, we're long stock. Home Depot, covered call. And AMD, covered call. And that's it. a few on my list that I'm watching. Caesar's Pizza, Weight Watchers under the low is a weak animal. Zulu Sierra, beautiful. Look at that beautiful pattern. Put that in the window. Learn, beautiful pattern. Send, I had yesterday, but now there's no symbol. So there must have been a merger of some sort on that. Whirlpool, bear gap negated, 2 bullish inside bars, breakout weekly, engulfing monthly. That's an alignment. Some hasn't gotten off the ground yet. So, but fine, give it another week or so. Corning, bullish, Mondelez, bullish, but we need a pullback. This came from trader, broker. Not a big target, but I like the 1, 2, 3. TJX, Alex gave us on his way out. That looks good. That's a day trade candidate, gapping up. Well, it's not gapping up. It's just this thing. Wow, this thing popped into the close. I didn't see that after he gave it to us. Wow. LBS, I'm watching. THS, nice breakout, weekly, monthly. This could even be a setup in our weekend letter. Let's look at some gappers before I give Ladon his gift. UNH, I just looked at the Dow 30 to see what was holding it up, and I'm always looking at the outliers, the biggest ups and the biggest downs. So this is a bearish gap. We'll keep an eye on this as a call spread candidate. Oh, TGI was another one I was watching. I like this wide range bar, bullish here. The old goose, gapping up a little bit. It's been lagging, but it's a put spread candidate. TTMP, it's a little penny stock toy, but 210. If that sets up intraday, that could be a day trade for you. LYB earnings 84.50. That's junk. Remember, I'm just looking for tier 1 setups at the open. This had a bearish gap down, filled the gap, nothing to do. But the weekly is kind of a reverse head and shoulders. So if it can just keep churning around here, it might take another couple weeks to stabilize. Sky West, I don't know if that's earnings, but I just saw the gap. That's a nice setup for a day trade. The old Sky West, I'll put that there. Cabo, I just saw this going by the ticker today. Never heard of it, but $800 stock. I mean, how did we miss this? Wow. Nothing to do with it, but it's a bullish. XOM had a nice close, 74.67. Put spread candidate, we'll watch that. Weyerhaeuser, it's a mess, extended. Could be a call spread candidate, so I'll leave them on for that. SNE, I don't like ADRs. Merck, 75 and change. It's deep into this, but at under 30-minute low, it's a Condor setup. KKR, 2285, it's top of the range, nothing to do. ITW, 133, bearish gap, but support. Wow, I don't have many tier 1s here today. Yesterday I had a bunch. So 148 is pretty deep up here. Oh, here's the other oil gapping up. So Alex was right. Alex said both of these were going to gap up. Now this I like. This is a put spread candidate. It's gapping right above this trading range. Now it's not a directional for me, but it's a put spread under these lows. Let me put that in a little thumbnail there. Charlie India. Wow, I remember watching this on this little pullback right here. That was your entry over that bar on Jan 8. Bottoming tail, range expansion, closed above these prior highs. Stop low, buy high, stop low. That was your entry. CBS 64. That's a bearish gap. That's a call spread candidate. Trader. Oh, UNH down because of new bill about PBM. Okay. Charlie India, Anthem 300.